Simon Hunt, welcome back to the channel.
Well, good afternoon. Thank you for having me.
If you were to look at financial markets at this moment in time, if you were to look at the performance, particularly in the US of stock markets, they've reached some all-time highs. We see that the Federal Reserve seems to have got inflation under control, and everything looks rather rosy in the garden at the moment. The dollar is strong. You'd be forgiven for thinking that we're in a good place financially. What do you see when you look under the hood?
Well, what you see when you look under the hood is GDP did not grow by 3.3% in the fourth quarter. It was a much lower figure than that. When you look at real inflation, you have to go back to the 1970s, when Arthur Burns started manipulating the CPI data, and successive administrations ever since have continued to do it. Now, there's one guy called John Williams of Shadow Government Statistics who actually removes all the manipulated data that different governments have introduced. And you go back to how the CPI was originally formulated, and you come up with a CPI today in January, believe it or not, of 10.9%, not the 3-odd% that is being bandied around in financial markets. The other part of the equation, which John delves into, is unemployment. Mm-hmm. And I think it was in the Clinton administration that they removed those who were not announcing that they were in the labor force. They confined it to 1 year. And yet, if you go back to the original equation, where is unemployment today? It's 25-odd%. So no wonder in the last couple of years, labor has been very tight. Now, all of this is about to change, because companies across the board are starting to announce massive layoffs. And as some analysts who look beneath the published data, like Danielle Martina Booth, they are seeing companies starting in March announcing very big layoffs. And that's going to be another negative. Then we have to look at what's going on in the financial markets. Again, looking under the hood, you've got some huge problems arising in the real estate sector. And if you look at the banking index, it looks horrible. So we have the risk of more regional bank failures, and the consequences of the huge number of repricings that real estate developers have to do this year. I think the figure is now over 900 billion.
Of refinancing and refixing.
Of refinancings. So I think the risk is that the equity markets although being lauded by nearly everybody as being in a good place, as you rightly said, is actually in a pretty horrible place. And on my associate's technical work, we are looking for the start, and maybe even next week, of the beginnings of a very sharp correction in global equity markets, like the S&P down to about the 3,000 level.
That's significant. And what's going to be the catalyst for this in the short term?
Well, the catalyst could be one of several risks that look as though they are going to emerge in the financial sector. Is there going to be a new regional bank failure and the knock-on impact? The realization of this massive refinancing of real estate? But I suspect it's going to be geopolitical.
Okay.
So far, markets have basically said, what's the war in Ukraine? Where is Ukraine? No influence on my equity market. Or in the Middle East, it's just over Israel, no problem. The problem is it's much deeper than that. We need to go back to at least 1991, if not to the end of World War II. The primary foreign policy of Washington has been to dismember Russia and gain control of its massive natural resources. That objective, despite the failure by Ukraine, backed by NATO and America, to defeat Russia, has fallen by the wayside, as it's pretty obvious that the war has been won by Russia whenever it wants to make the final push.
What underpins that position for you in terms of Russia winning in Ukraine? Because it wouldn't necessarily be the interpretation of most people, or at least via the media.
No, because the media is completely controlled by the governments. There's precious little real analysis, independent analysis done by the media. That's why there are podcasts like you run, in order to come out with what actually is the real position. And the real position is advocated by people who really know the situation, such as Larry Johnson, Scott Ritter, Ray McGovern, etc., etc., and from my own friends in Moscow. Mm-hmm. So I'm 90+% sure that what I said is correct. Where are they going now? It seems to me that the next part of the war, orchestrated by Washington, via NATO, is more direct attacks on Russia itself. Their intelligence, the intelligence services of the US and the UK have had operatives in Russia for many, many years, just as Russia has had operatives in America and the UK. It's part of the game that's been played.
And how does this play out? Because I mean, it's not just Ukraine where there's challenges. We also have challenges in the Middle East. We've got challenges in Israel. We have challenges in Yemen. We have challenges in Iran. We got a lot of challenges.
That's the problem, and the markets are ignoring all of those challenges. Though the first thing that has started to emerge with shipping being rerouted around the Cape, prices are starting to rise. Goods are not getting through. I saw a newspaper report. Tea prices are rising because tea is not going through the Suez Canal.
Mm.
So what we will find as the year progresses is that the price of goods is going to be rising because of the extra time it takes and cost of shipping around the Cape.
Shipping around the Cape, it's longer for one, so therefore burns more fuel as well. But if we've got issues in the Middle East, it's going to have implications for oil prices as well. So not only are goods going to have to travel further, but potentially at a higher price.
Absolutely. I think by the end of 2025, and even by the end of this year, there is a very big risk that the Straits of Hormuz will be shut down and the Suez Canal. So you're looking at oil prices $200 plus, and you look at the whole global derivative market imploding.
Just join the dots there now for our viewers in terms of we get oil to $200. How does that actually translate into the global derivatives market imploding?
A large part of the derivative market is interest rates.
Mm-hmm.
So your interest rates will explode. And what's that going to do to everything? I mean, we have on our work, we actually have by the middle of 2025, with inflation rising sharply in the second half of this year and until mid-2025, world inflation probably 15% plus. That means that long bond yields will be rising very sharply, and we will have, as an example, 10-year US Treasuries over 10%. That crashes a highly leveraged global system.
Okay, so we start with escalation of tensions in the Middle East, leading to closing of the Straits of Hormuz and the Suez Canal.
That is a big risk. It's not a forecast, but it's a risk that I think is a pretty 60-70%.
And then as a result of that, you're seeing a spike in oil prices. You're seeing longer travel routes for goods. This is massive inflationary impact, which has a knock-on effect to all interest rate derivative markets. But it also then puts let's look at the US national debt, currently at 34 trillion. And then you're suggesting
and rising.
And then you're suggesting that will have to be refinanced at significantly higher rates than it currently is, leading to an even greater acceleration in the national debt. Is that where we're going?
Yeah, what we're going into from 2025 for the next 7 odd years, rolling recessions, if not depression, accompanied by internal conflicts within countries, and probably by 2030, America seeing that its hegemony is at stake, and particularly the dollar-dominated world, as the BRICs starts to, by 2025, starts to accelerate de-dollarization. What do empires normally do? They use their last resources, and that means war.
You talked there briefly about US dollar hegemony. I want to dive into your thoughts on BRICS and BRICS countries, because this isn't happening in a vacuum, and this isn't happening without other countries. Potentially, you could say they are preparing for this outcome in terms of their own currency.
They are preparing. What we're basically seeing through BRICS members wanting a multilateral world, not a unilateral world dominated by one country and one currency. You have a group of, 10 countries. They don't all have the same policies, but they talk through their difficulties to come up with a policy that suits them all. And the power behind BRICS is the New Development Bank, which you could say is a combination of the IMF and the World Bank, which is located in Pudong, Shanghai, with their own skyscraper, the staff of about 300 plus, now run by the ex-president of Brazil, the lady, I've forgotten her name. And what we're seeing there is China, since the Shanghai Gold Exchange was opened in 2002, Chinese citizens, either households or financial institutions, have drawn approximately 23,000 tons of gold from the exchange.
Yeah.
In addition to that, various ministries, including the PLA, own an approximate like amount. What I think is going to happen is that one day, probably before 2026, probably either late this year or in 2025, China will announce, own X tons of gold. Our currency will be backed by the gold that our citizens hold. That doesn't mean it'll be convertible, but it'll be a gold-backed currency. Similarly, Russia actually owns north of 12,000 tons, not the reported 1,200 tons approximate that the central bank owns. The bulk of the gold is owned by the company that sits above the central bank. And I think probably simultaneously, Russia will announce our oil will be priced in gold, i.e., for every barrel of oil, it will be worth X grams of gold. Effectively, then you're saying the ruble is backed by gold. Interestingly, I just received a note this morning. Arizona has passed a law that they are opening a depository for gold and silver against which citizens can buy and sell gold and silver. So is this the start of individual states going against the federal government and setting up their own exchanges in the same way that Texas is refusing to follow federal government regulations over its border? And you have 25 other states backing Texas. Is this the start of a reconstruction of America? Question I can't answer. But it's certainly, it pits the real battle between the red and the blue states.
Indeed, it does. And that kind of probably also speaks to your comment with respect to internal friction,
Yeah.
put it mildly, within countries.
Yeah. But you're going to see it in Europe too. I mean,
You think so? Yeah.
Throughout European history, it's been the peasants who have started the revolts against their government. And today, it's the farmers, not only against their own government, but against Brussels for imposing regulations on how a farmer in France or Germany, Spain, Italy, or wherever runs his land. Bureaucrats who probably have absolutely no idea how to farm, but they're following a green agenda. But it's the people who are revolting. I mean, just to take it a bit further, Klaus Schwab and Davos and whoever is behind Klaus Schwab, they've bought most governments, but they've not bought the people. And it's the people who will revolt and throw their governments out. But this can only happen in a crisis. And I think that crisis builds up, starts building up in 2025, if not by the end of this year.
And how does it play out then this year in terms of, well, in terms of two things, in terms of stock markets, for example?
Well, this year we'll go into two halves. By the middle of this year, and maybe by April, by the end of April, you'll have the big correction, as I explained, in equity markets and base metal markets. Central banks then flood their systems with liquidity, drop interest rates, which then causes economic recovery, but highly inflationary to start, if not probably in the third quarter. And then everybody looks for their inflation hedges, equity markets and base metal markets more than double in the space of 12 months. Inflation takes off. Bond market yields, or the long end yields sharply, as I've said. And that then causes the big collapse. So the art is going to be take profits now, go back into the market when you see, for instance, the S&P around 3,000, go long, but don't be the last guy on the dance floor when the music stops.
Yeah. So this is very much a kind of, it's timing the market to a degree, but there's fundamental analysis backing this.
Sure.
In a scenario like that, if we turn our attention to the dollar is strong at the moment. Some people would describe it as, the cleanest dirty shirt at this moment in time. Do you see that dollar strength then being quickly eroded based on everything that you're seeing, that you're talking about?
Yeah. In fact, we have the dollar index, which is now around 104, probably dropping to around 90 by the end of this year.
Yeah, that's a significant move.
Eventually by 2030, whether it's in 27, 28, 29, 30, who knows? But it's probably going to halve in value.
That's even more of a significant move. So if we tie that up with everything that we've said, whether it's we're basically talking about the US dollar in a situation like that losing its reserve currency status. Is that what you're talking about?
Yeah.
and moving away from a unipolar world.
Like all other empires.
Okay. So it's very much, if we were kind of to theme this is very much kind of end of empire stuff that we're talking about now.
Yeah.
Ultimately.
Yeah. It's a huge pivotal point in history.
How does gold fare in all of this?
Well, gold comes back into the monetary system, whether America likes it or not. Once people see that the yuan is backed by gold, and effectively the ruble is backed by gold, and they've got the gold reserves, where do people go? Where do countries go to hold their reserves when they see that Russia's frozen $300 billion is actually starting to be sent back to Ukraine, which is what the Belgium has actually said. The interest on what has been earned on those assets will go back to Ukraine. Foreign Minister said so. The EU is debating just that at the moment. Belgium's gone that way. It's likely the rest will, particularly who we've got at the head of the European Commission. A certain German lady.
You don't paint a very rosy picture. How do people protect themselves?
Their risks and their opportunities. They just have to play the cycle and prepare for the worst. Very few people are preparing for the worst.
Practically, what do people need to do to prepare for the worst in your scenario?
Hold physical gold. Stock up on food. Play the cycle in equities, but be wary of playing it too long. So it's an opportunity to make hay to survive the storm.
If people want to find out more about what it is that you do, where can they find your content online? Simon-Hunt.com. Fantastic. What I'll do, Simon, is I shall put a link to that in the show notes in the description below this video. But for now, Simon Hunt, thanks for joining us on the channel again.
Well, thank you for having me. Pleasure talking to you.